Hello and welcome to Current Issues. I'm Ajita Jain. GST Council has discussed 4-tier tax rate and additional cess on demerit goods. The ultra-luxury items like high-end cars and demerit goods like tobacco, cigarettes, soft drinks would attract an additional cess on top of the 26% GST rate, so as to create a compensation fund for the states. But this has invited a lot of criticism from the states. They argue that why has tax been reduced on luxury items and on essential items it has been raised. To discuss the issue, I have with me today Mr. S.K. Jindal, who is a chairman from Investment Commission, and he is also from ASSOCHAM. Mr. Amit Malviya, BJP spokesperson. Mr. Mohammad Khan, who is a Congress spokesperson. I have with me in the studio Mr. Sharad Kohli, who is a taxation expert, and Mr. Ravi Shekhar Singh, who is a Deputy Commissioner of Commercial Taxes from Uttar Pradesh. I welcome you all and thank you very much, all of you, for joining me here today. Before we delve deeper into the discussion, let's watch a report on this. The Goods and Services Tax Bill, officially known as the Constitution 122nd Amendment or simply GST Bill, has hit the headlines again. The centre has proposed a 4 tax slab structure in the latest meeting of the GST Council. The slabs proposed are 6, 12, 18 and 26%. The centre's proposal to the council entails a lower rate of 4% for precious metals, a threshold rate of 6%, 2 standard rates of 12% and 18%. Services will be taxed at 12% and 18% under this dispensation, a higher rate of 26% and a cess on luxury items, pan masala and tobacco products. It is noteworthy that to keep inflation in control, the centre has exempted food items. The centre has agreed to compensate states for 5 years for the revenue they will lose when GST subsumes their levies. The centre has mooted an additional cess over 26% on luxury items like fancy cars, cigarettes and soft drinks to create a fund for compensating states in the GST regime.
The revenue model also should be such that the centre has some additional resources which could be used for compensation payment to any losing state. Detailed discussion.
This has resulted in pushback from states. Kerala's Finance Minister Thomas Isaac said that the new cess violates the basic spirit of the GST, which is to have one uniform tax system. He tweeted, "Central government wants to impose a cess on GST to compensate the states. This is in contradiction with the concept of GST itself." This is clearly a tussle between the states and the centre. Centre proposed a 6% tax on essential items and additional cess over 26% on luxury items. But states actually want a higher rate of 30% plus on luxury items so that the tax rate on essential items can be brought down to 4% from 6% proposed. 11 lakh business that currently pay service tax will continue to be assessed by the centre rather than the states towards state objects that it's unfair and challenges the federal structure. The centre says that over time, officials in states will be trained to take over. But the question remains that why has tax on luxury been reduced to 26% and tax on necessities have been raised to 12%? Team News World India. So I go to Mr. Amit Malviya first, who is a spokesperson of BJP. Mr. Amit Malviya, congratulations for reaching onto a consensus on the compensation thing. But my question to you is why there has been no consensus as yet on the proposed rate structure? Because today was the second day of the GST Council meeting and the reports that we have says that still no consensus could be arrived at on the issue.
Ajita, as you would have just heard the Finance Minister, he said that there's going to be a meeting on the 3rd and the 4th of November,
yes,
before 9th, 10th November when the legislation will be addressed. On the meeting of the 3rd and 4th November is when the rates will be finalized. The 3-day meeting between the state and the centre that happened recently was to propose alternate structures, deliberate them and then come up with something that's acceptable to everybody. As you rightly said, there's a great headway that has been made in terms of the compensation, and that's a very, very positive development in the first meeting that has of the council when it came together. And we are quite hopeful that all the states along with the centre will arrive at a consensus and will come up with a rate which will be acceptable to all, and GST will be the biggest and the most far-reaching indirect tax reform that this country has ever seen.
Right. So, you are very confident that on 3rd and 4th November, the rate structure would be finalized. Let me just understand this. from Mr. Mohammad Khan, who's a Congress spokesperson. Are things really so easy, Mr. Mohammad Khan? Because Congress has been arguing for the capping the GST standard rate at 18%.
Well, Madam, I don't necessarily share the optimism of my learned colleague from the BJP. In fact, we were discussing this issue earlier today and we were following these developments closely. And we feel that these are the beginnings of a betrayal of the grand bargain that was reached in the middle of this year. Of course, we were the first to congratulate the BJP at passing such a historic bill, and they did very good work at that time. Now, we have three problems that seem, and I'm sure Mr. Malviya can correct us for the record. Now, first problem is with regard to the cess. We never discussed this cess. Now, you are suddenly going to start imposing a cess on the consumer. We checked this. This is a cess that would, like the Swachh Bharat cess, it will be levied directly onto the consumer. This is a new notion, one that needs discussion. And the fact that it's being introduced unilaterally at this stage is very worrisome, madam. Number two, madam, the issue at hand is goods and services tax was meant to be a unifier. Goods and services would be taxed simultaneously. But we are seeing right now, as you also flashed on your television channel, that services will continue to be taxed separately. That is a reiteration of the status quo. Why do we have a GST then? We would love to hear the government's position on what their thinking is, because right now it's very opaque. The third and final point of concern that I want to raise on your channel today is the following. Look, the biggest, and this will be the biggest point of debate in the days to come, they have reduced the luxury rate from 40% to 26%. That's a steep decline, right? Now, it was 40% because it was meant to offset all the other rates, the standard rate and so on and so forth, right? Because we have the idea of a revenue neutral rate, this utopian rate, which if we apply it, then whatever we are making right now in terms of taxes, the government won't lose any revenue, right? But if you reduce the luxury tax, then how do you overcome that shortfall in revenue? That is exactly what the Kerala government is saying, and we find great merit in that argument. These are issues that need to be addressed, madam, and it is very worrying that they're being raised at such a late stage.
Mr. Amit Malviya, road is not that easy as you think. In the meantime, I would like to go to Mr. S.K. Jindal also, who's the chairman of Investment Committee of ASSOCHAM. Mr. Jindal, the issue that has been raised by Mr. Mohammad Khan, how do you look at it? The 3 points he has raised about the cess, about the services that are being taxed separately and other things.
No, I agree with that this needs to be addressed also, because services also should be clear what is going to happen on GST front for services, how they will be handled there. But at the same time, the kind of headway has been made, the kind of progress is being made. I am satisfied with it. I am also optimistic that the things are going in right direction.
Right.
There can always be issues which can be discussed and sorted out. So the direction is good. Individual issues needs to be discussed in, like for me, as I look at
what are your
precious
apprehensions?
metals, gold is covered under precious metals. The current VAT is 1%, and they are putting it on 6%, saying this is a luxury item, precious item, precious item like gold.
Right.
But gold in our country is a saving item and it is not a luxury item. So it cannot be taxed from 1 to 6%. It is not a very good idea to tax it at 6% from 1%. Enforcement will become much more difficult, and this will be supporting the parallel channels and the other illegitimate trade if we hike the tax by 600%.
Right. Mr. Sharad Kohli, you wanted to come in between, you wanted to say something.
Yeah, first of all, I would like to correct Mr. Jindal with due respect to him that the gold rate is 4%, it's not 6% which has been proposed, although no rate has been finalized as yet. But then it's been kept, the precious metals have been counted in the 4%, which is beyond the 4-tier rate. My main concern, Ajita, here is that, you know, the concept, one is the fiscal motive which the states have in talking about it should be this rate, it should be that rate. The other motive they have is which is a populist measure. Populist measure is to see that the citizens of that state, they are not subject to a spiraling inflation. Absolutely. So my main concern is when it comes down to controlling inflation, as the finance minister says, that this is a balance between revenue neutrality and a balance between, you know, so that you don't lose the revenue which the state is generating. Now, the main concept of GST is based on input tax credit. Now, I take an example. Let's say a trader has a billing of 1 crore of rupees. And he charges, let's say for example, assume that 18% is the rate free, is the general rate. He charges 18 lakhs as the GST. Now he's got an input tax credit of 10 lakhs, which means he has to net deposit 8 lakhs. Now the 10 lakhs which he is saving, how much of that 10 lakhs, Ajita, because the finance minister and the prime minister since beginning have been talking about that this is eventually going to boost the GDP and the prices are also going to come under control. So if this business person does not pass on the benefit of the input tax credit to the consumers, the effect of GST is going to be all on the shoulders of the consumer. We are looking at service tax of 15% as of today. And we are looking at a threshold of 18% for example, for the standard rate. Now all services, that would mean all services from 15% would shoot up to 18% straight away. So which means your telephone, your insurance, everything that you're using is going to get more expensive. So this is going to have a cascading effect on the inflation. So how the government is going to tackle this inflation and how it will ensure that the business persons, they pass on the benefit of input tax credit to the consumers is a big question mark.
Exactly. We will ask the same to Mr. Amit Malviya, but before that, Mr. Ravi Shekhar Singh, you think issue is just the rate structure or things are much more beyond that? We need to look beyond that also, because at the implementation level, there are so many things that need to be looked into.
Yeah. First of all, as a state government employee, we welcome GST and the decisions of the GST Council. But at the same time, it has to be implemented in its true spirit. Presently, there is an attempt to segregate goods and services into two different domains. But GST is the single integrated form of tax arrangement. We cannot have a goods tax and the services tax. This is not the improvement over the service tax and the goods under the VAT. So we need to integrate the goods and services into a one GST regime, and for that we need to devise the administrative mechanism by which the dealer must have to go for a single interface. The dealer should not be dealing with this department or that department every other day. For the administrative mechanism has to be devised in such a way, either the dealer has to go to the state government officers or to the central government officers. This is a very simple mechanism by which we can have this by empowering the different authorities under the Act in all the three acts, the CGST Act, IGST Act and the SGST Act.
Right.
This will ease the burden on the dealer, as well as this will do a lot of good to the ease of doing business.
Right. So there are a lot of issues, Mr. Amit Malviya, that are coming up in the discussion. How would the government tackle all these issues, like not letting the inflation rate go up and actually passing on the real benefit to the consumers?
Look, these negotiations are going to be complex, they are going to be winding, and the government is currently in the process of that. The government has very clearly said that its ultimate objective is to see that inflation does not shoot up, the burden on individual consumers does not go up. It is to ensure that items that were earlier being taxed at a very high rate and are of essential nature get the relief that they need. If there are goods that were perhaps not being taxed adequately, and if there is room to tax them higher in the new structure, then that it is done so. The whole objective here is to see that we move towards a unified tax regime, we move towards a very simple tax regime where the individual consumer does not get burdened. For example, Mr. Kohli on your program just said that what is it going to be the cost that individual consumers will have to bear. The fact is that we don't have the answer yet because the council has not agreed on it. The council is still deliberating it, and therefore to assume that it will be 18% or 12% is not appropriate at this point in time. We should wait for the meeting on 3rd and 4th November to happen, let those details come out, and we must be all confident that the centre along with the state governments is going to do what is right for the people of this country, and what will not lead to the state government's interests getting compromised in any manner. The 3-day meeting has been very productive. They have made great headway. There have been great deliberations, and I am sure that on 3rd and 4th when the council meets, they will come up with something that's substantial and that everybody agrees with.
Right. Mr. Mohammed Khan, great deliberations are happening, but you have expressed your apprehensions, and those are actually the issues which are being deliberated upon. So you think, is it really that easy to find headway in that?
Well, I'll make 2 points. Mr. Malviya said that the purpose of the GST and the objective of the GST is to have a unified tax. Absolutely correct. But the problem is that's not what we see happening, right? The second thing he said is that of course you want prices to come down. But as Mr. Kohli illustrated, you're increasing the value of services from 15 to 18%, they're automatically going to become more expensive. Secondly, when you're lowering, the only people who are going to see a reduction in their likely taxation is the luxury tax segment, right? Because they were expecting after the Arvind Subramaniam committee report that they would be taxed at 40%. Now suddenly, and to Malviya Saab, I'll tell him these figures that are now being debated are a result of the information that has come out of these deliberations. So there is a certain amount of guidance to what the government is thinking, right? So now the government is saying that we'll peg it at 26%. Okay, so how do you make up that shortfall? You will inevitably end up increasing the standard rate is our worry. Now you will remember that the Congress had earlier said that why don't you enshrine it into the constitution, and the BJP argued and said that no, it doesn't make sense to hard code something like this. Fair enough. They accepted one of our demands. They accepted the fact that there won't be a 1% producers, manufacturers tax, and we then relented and said, okay, fine, then don't enshrine it into the constitution. But now the wisdom of what we were portending is becoming evident. The fact is, if you will have to recover, there will be a shortfall in taxation, and no state will want to be on the receiving end of a shortfall. So therefore, you will have to somehow keep playing with the standard rate, and that will inevitably, and we are already seeing, that will inevitably result in galloping inflation. We all expected inflation in the first year. Nobody was under the impression that the first year would be smooth. But the way things are going right now, I think we grossly underestimated it. And Mr. Malviya, there are people in your government who have given estimations as to what the prices would be of any, they've given a wide variety of illustrations, and they've explained what the impact would be. I think it is important to study those and to make sure that inflation is contained within a reasonable limit.
Right. Mr. Jindal, your take on this?
My take is we need not worry or get panicky on such things. Things are going in right direction. We should appreciate that. I don't think something of that sort will happen, that that kind of inflation we will see and other things which go against the interest of the country. They are working in the right direction. They are working very actively on it, proactively I will say. I was not expecting all these informations will come so quickly. So we should have faith in the system, and we should let them do it first, and we should not try to get panicky and react on it.
No, but given the diverse problems each state face with the GST, don't you think an early resolution is doubtful?
No, they are discussing. They will find a good solution. We should not think that they will not be able to find a solution. They are able people. Let them at least do it in the first place. Why should we think that they will do something wrong?
No, having an optimistic approach is good, undoubtedly, but Mr. Sharad Kohli, we cannot ignore the practical issues that are there.
You see, we need to keep in mind, and to a certain extent, to partly I agree with Mr. Jindal, that we are talking of a federal structure. We are talking of a state where there was never a unified tax in this country. My personal take is, I'll give a apolitical statement. I don't belong to any political party, so I've got no biases against the Congress or the BJP either way. What the point I'm trying to make is that this is going to be an evolutionary concept. As we move forward, even the Arvind Subramanian committee on informal terms were talking that to stabilize all these problems is a matter of 2 to 3 years. When these problems come, we are going to deal with them. For now, as Mr. Jindal said, there are 30 finance ministers sitting in one room with Mr. Arun Jaitley as the Union Finance Minister. They are deliberating on the issues. Obviously, each state has got their own issue. But let's not forget that we are looking at a federal system. One country, one tax is a difficult thing to achieve, which is why we should accept the fact that it took so many years for this GST to come to the floor.
Right.
And it is now going to become a reality. So I think we should look at the glass half full rather than the glass half empty. That's my take on it. I mean, we should look at it with a very positive outlook. And as far as the cess is concerned, the 26% rate,
Yes.
with the luxury rate which you spoke about, even if 26% is on the proposal, they have put a cess. The idea of cess was, with Mr. Muhammad Khan said, let us put it in the constitution. No, they said let us put it 26% because cess is considered as a temporary thing. So if there is ever an opportunity to remove that cess once the revenue targets are achieved, I think why not the luxury good manufacturers and the businessmen be benefited as well. Let us also not forget, Ajita, that what is luxury today becomes comfort tomorrow.
Yes.
What is luxury tomorrow will become comfort day after tomorrow. So we have to have a long-term approach to the luxury, progressive approach to the luxury goods, and which is why this cess is being proposed to add to 26%. So it might still remain 40%. The 40% may still remain 40% after adding the cess. That is the point I wanted to.
Right. And Mr. Ravi Shekhar, what solution would you propose to what all the roadblocks are there, and what challenges are there in reaching to a consensus?
First of all, I want to say that the administrative mechanism must be very clear. One dealer, one interface. The financial autonomy of the state must be honored. If we are going to impose cess, the right of the states should not be curtailed to give them the right to cess their dealers. The states are sacrificing a lot for the sake of the GST, but in return their rights are curtailed, the rights of the officers and the employees are curtailed. This is not in the spirit of the GST. Earlier I have also said the segregation of the goods and services into different compartments is antithetical to the GST itself. Then as far as one friend talked about the inflation, the food grain items are kept out of purview of the GST. So on that the prices will come down. This will take the inflation in control. I want to say the stakeholders must be taken into consideration and they must be consulted for the smooth rollout of the GST.
Right. Mr. Muhammad Khan, what solution would you propose? Because you have a lot of worries that you mentioned, so many things. I mean, I need to understand what solution you have for all the worries that are being talked about.
Right. Well, ma'am, I wouldn't call them worries to begin with. The fact is they are apprehensions that we've been voicing over the last 2 years. It is our role as the principal party in opposition to make sure that the government takes note of them, and we would be remiss in our duties if we didn't put these before the government. So having said that we don't want to create any scare scenarios or panic anybody, we must say that, look, the idea behind the GST was an integrated tax, was a unified tax, right? We are seeing 4 slabs, chalo, that's fair, that's fine. We are seeing rates already starting to fluctuate even at a notional level, chalo, that's also fine. We see that the GST Council is deliberating and already, consensus is eluding us, right? As in, we just saw a couple of hours ago that the GST Council was unable to reach a consensus, right? These are things that the government, I agree that the government is one of the panelists said that the government is moving at a very good pace. Excellent. They must move at a pace if they are to meet the timeline they've set for themselves with regard to April 2017. But here's the question, right? I mean, in their hurry to get to a certain milestone or a goalpost, you have to make sure that this reform, which has been decades in the making, is not compromised in letter and spirit. There is, we have written extensively on the subject and we can of course put forth our original concerns with this bill. But for now, I want to say that we stand with the government, but please take the views of everybody on board. As somebody said, consult all stakeholders and try and don't make best the enemy of good, but try and come out with a good version if you can.
Right, Mr. Ahmed Mavliya, how will you and your government ensure that the spirit of the GST is not compromised with?
Well, Ajita, just as the Congress spokesperson said, this legislation has been in the making for a very long time. The opposition did try and stall this legislation even in this government, but finally this legislation has seen the light of the day. More than 50% of the states have ratified this legislation. The council is here, the discussions are on, all the state governments are represented adequately, the federal structure is being taken into consideration, the financial prudence has been given topmost priority. No one feels at the losing end of the reform is being ensured. I can tell you one thing, that we should be patient. We should not try and create ripples, and things will fall in place. We do have a milestone, and that milestone has been set for the best interest of the country. We as a central government, along with all the state governments, are going to ensure that this legislation is rolled out, and eventually the people, the poor of this country, benefit the maximum.
Okay. Mr. Jindal, any suggestions from your side?
You see, I tell you, as I look at, this is a very revolutionary step, and this has a lot of strength into it. If we are able to put it, if we are able to roll out, it will be for the big benefit of all of us, because it will improve and increase our efficiency, it will reduce our cost, and it will save us from lot of wastages.
Right.
First thing. Second thing, all other policies of the government made till now are people friendly. Why this will be against people? This cannot be against people. They will not do anything against. So we should not be nervous about it prematurely. Let them do it, and they can always, small things can always be handled later. So let the things roll out. And the biggest mistake, if it can happen, in the lighter vein I am telling you, if they make a set of rates for a party and B set of rates for those who are not members of that party, that could be the biggest mistake they can do, but they will not do it.
Right, right. So you'll have to wait and watch for the final outcome. Thank you very much, all of you, Mr. S.K. Jindal, Mr. Amit Malviya, Mr. Mohammad Khan, Mr. Sharad Kohli, and Mr. Ravi Shekhar Singh for joining us here on this discussion. Thanks a lot.
Thank you very much.
So that's all we have in current issues for the moment. Thanks for watching. Bye-bye.